Hello everyone, today I want to talk about AMD, which is accumulation, manipulation and distribution, and how you exactly use it on the lower time frame to make sure you actually catch the right move and doesn't get stopped out instantly. So AMD is basically a very simple three-step cycle the market uses to move price, and you will see this happen every single day and also on every single time frame. The first step in this cycle is the accumulation, as you can see right here. This is where price moves sideways and makes a range where we have equal highs, equal lows, very slow candles, and no real direction because this is where market is building up orders and waiting. And most people who try to trade inside of the accumulation will just end up getting stopped out. Then we have the second step, which is manipulation, and this is where some kind of liquidity gets taken. Price will usually wick above some highs or below a range, like you can see in this example, and this is the sweep. And this is simply the market grabbing orders before the real move happens. So if we, for example, in this case, see a sweep of these lows, then we usually expect price to go up after that. And now we have the final step, which is distribution. And this is where the move actually plays out. After this sweep, price usually expands in the intended direction, breaking structure and starting to move towards a clear drawn liquidity, which could be either session highs, which we could have here above, or higher time frame fair value gaps. And the whole reason why I focus on where we are in this cycle, even on the lower time frame, is to keep me from taking trades inside of accumulation and manipulation, and instead wait for the distribution, which is the part where the move actually begins. And this is how I avoid getting stopped out before the real move happens, and instead get my entry exactly when price begins to expand towards my drawn liquidity. So let's quickly look at an example of this structure on the charts. Now I've loaded up an example of the AMD model on the charts, and as you can see here we have our accumulation followed by the manipulation, and in this case it is into a 15-minute fair value gap. So price sweeps this fair value gap and then we get the immediate distribution right after to the upside. So if you were looking to trade inside of this, then you can see you would have been instantly stopped out no matter where in this range you entered. So therefore when you see the accumulation right here, then you need to wait for us to manipulate before we see the distribution. And this exact cycle the price does all the time can also be seen on the lower time frame and can be found inside of this higher time frame manipulation. And knowing how to spot this whole cycle inside of the manipulation on the higher time frame is where you can make sure that you don't get stopped out inside of here before we get to the real move. So let's get into some chart examples of the AMD model on the lower time frame. Now I have found a trade that I think looks very good. You can see if we look at the higher time frame that we are very bullish. We have had this retracement into this 1 hour gap on ES and on NQ. If we go to the 15 minute, we can see that we have an external SMT. We can also see that we have this 15 minute fair value gap that we can target, as well as this 5-minute fair value gap. So scaling down to the 1 minute to try to find our entry, we can see that we inversed this 1 minute fair value gap. So let's try this trade. And if I just skip a few candles ahead, we can see the problem. We get instantly stopped out. And the bad thing isn't only that we got stopped out, but more that if we look a couple of minutes later, we can see that the real move actually plays out. So what could we have done better in this situation? We can recognize that this entire range right here is our accumulation. Then we can look at this section as our manipulation, and now we can finally look at this move as our distribution and mark that. And now it becomes very clear to see what our mistake was trading inside of this range. The mistake was trading the long inside of the accumulation and not waiting for this lower time frame sweep to make our manipulation and enter into longs afterwards. So if we go back in time, we can see that we accumulate right now, then we get our internal sweep down here, where we can then scale down and find a fair value gap that we can inverse and wait for that gap to inverse, as we do right now. Then we enter our long position and see our trade play out very beautifully. Let's try and find one more example where we actually use this concept before entering in our trade. If we look at our bias for this day, we can see that we are respecting bearish PD arrays and disrespecting bullish PD arrays. and this automatically tells me that we are most likely going to be bearish on the day. So scaling down to the 4 hour, we can see this again. We have tapped into this 4 hour gap on ES, and if we look at NQ, we have done the same thing. So for this day, I would ideally be looking for shorts. So if we see how we open at market open, then we can see that we made this wick up, taking out all these LRLs, which is low resting liquidity. So we can actually see a kind of an AMD setup forming where we have our accumulation, the manipulation, which takes out key levels, which in this case is these highs. And then afterwards, we should expect our distribution, in this case by price going down. So let's see what happens. And we can see price actually starts to deliver lower. So now I would ideally wait for a continuation short from one of these many 5-minute gaps, so we can mark these two gaps out and then scale down to the lower time frame and see what happens. Now we see price starting to retrace back to these two fair value gaps. So let's see how price reacts when we hit them. We tap this 5-minute gap, but at the same time we can very clearly see that we are in the accumulation phase, and therefore I would like to see a wick into this gap or a wick into this other 5-minute gap, followed by the distribution lower. So let's see if we get that wick, which we get right here. And now we would be looking for an entry, which would be an inverse of this fair value gap. And we got that inverse now. So since we have had our accumulation followed by the manipulation into a key level, I would then expect distribution, which would mean that we would dump straight down to our targets. I can therefore enter a short with my mechanical 20-point stop loss and target a 1 to 2 RR. And we should see this trade play out beautifully straight to our target, which was just hit. So this is a real example of how you can see the accumulation followed by manipulation and then entering on the distribution part. So this is how we can use our knowledge on this 3-step cycle, both on the higher time frame, but more specifically on the lower time frame, to catch our trades inside of the manipulation and don't get stopped out by taking our entry in the accumulation. So this was all I had for you today.